Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 4th of November. Well, it's been quite a week in investment terms. Of course, in the UK, we had the budget. There was something of a hangover the following trading day. For example, one of the concerns was although the national insurance rises would not affect employees directly, there could be indirect effects if businesses choose to pass on or negate those rises by hiring their costs. Obviously that's inflationary, just at a time when we're getting inflation under control, which could put some doubt over the current downward trajectory of interest rates in the UK. In the US, meanwhile, it's been a very busy week indeed. Five of the so-called Magnificent Seven technology companies have been reporting, and with mixed results. A good start from Alphabet, who of course own Google, but rather less pleasing numbers in terms of their outlook from the likes of Microsoft and Facebook owner Meta Platforms. That gave something of a Halloween horror show on Friday, although to put that into context, the indices do remain in rude health for the year to date. Indeed, the Dow Jones is currently up by 10.8%, the S&P 500 by 19.6%, the Nasdaq by 20.5%, and our own FTSE 100 is up by 5.4%. Turning to next week, there's a fair flurry of corporate activity. We're going to have some full year numbers from Associated British Foods. Shares are up about 7% over the last year, although over the last 2 years they have spiked by 65%. Of course, when it comes to AB Foods, which is a slightly unusual animal, we're really looking at Primark, which accounts for around half of group sales, apart from its other divisions such as sugar, which did see some weakness earlier in the year from lower sugar prices. Equally, poor summer weather didn't particularly help Primark, but from a full year point of view, it's very much expecting a better outcome. So we'll be keeping an eye, obviously apart from the profit number, on the profit margin, where lower material and freight charges should have helped provide something of a tailwind. There's also half year numbers from Marks and Spencer. This particular stock has been on a tear. The shares are up by 68% over the last year for various reasons. They're expanding what was already their jewel in the crown in terms of the food offering. The clothing unit seems to be undergoing something of a turnaround, and analysts will be expecting some sort of update, not only in terms of any international expansion they might have in mind, but also some sort of margin target. And of course there's also the joint venture with Ocado Retail, which no doubt will be mentioned within the release. Also, third quarter numbers from ITV, shares up about 17% over the last year. When we last heard from it the half year, the messages were slightly mixed. Positively, they'd had something of an ad boost from the football Euros tournament, but on the other hand, their studios business had suffered slightly from the writers' strike on the other side of the pond. So in terms of strategy, we may hear something further about ITV's general move towards streaming and its channel ITVX, and also whether there's been any updates on its net debt figure and its cost-saving plans. Elsewhere, there are other updates due next week. Half-year numbers from Sainsbury, trading statements from Rolls-Royce and Taylor Wimpey, and also half-year numbers from BT. Thank you for watching. Have a great week.